Hey everyone, hopefully you're having a good day. My name's Andy. My channel is Finding Value. Today we're going to talk about, I'm going to talk about the kind of the big picture view of commodities, kind of where the deficits fall for some of this stuff like nickel, copper, those types of things, aluminum. I'm going to also read some quotes that I've read throughout 2022. And we're coming to the end of 2022. I kind of want to hit up on some of this, get you guys in the right mindset for at least if you're a long-term investor. 2023 could be a crazy year. We could go sideways. We could drift a little bit. First quarter 2023, we could very well rip. It really depends on market sentiment, what the market's looking at in terms of recessionary fears, the supply demand imbalances, inventory levels, and we're going to look at some of that stuff. And right now, we're putting in these gigantic patterns. And I keep coming back to the pattern in awe because they are reversal patterns, double bottoms, all these different things. We're seeing it in CPI to PPI. And if we look backwards and we look at previous commodity bull markets, really where they've shined is where you've got two different types of scenarios that I can find. And I'm kind of just looking at these commodity bull markets. We had a bull market in commodities in the 1930s. And that was under a deflationary type of environment or a disinflationary type of environment. Deflation or disinflation, depending on where you were, or very low inflation. Commodities outperformed everything during that time frame. So did gold, did very well as well. And you maybe could argue that gold was revalued, therefore all the commodities were revalued higher. But when you look at everything and you look at some of these, 1970s, the year 2000 to 2008 to 2011, somewhere in that time frame, what we saw was liquidity outpacing the supply. So liquidity came into the system. It puts everything into a shortage, hence inflation. And then we had to increase the supply of those things. Now, is it possible where the shortages, the molecules, the shortages of the commodities are so great that we could actually have inflation during a event where liquidity is stable? I think that's the case. And that's where everything gets into this mix here, because fiscal spending on debts to cover all this stuff and the interest payments and all this other stuff, that's liquidity into the system. And I'm looking at the supply side problems. So let's just look at some of the problems. I'm going to read a couple of quotes, look at some inventory levels, look at some supply demand, market balances, and look at the charts all kind of simultaneously. So I'm going to start here with copper. And this is just COPX. It's just an ETF. So it's the copper companies. To me, this is a clear double bottom. You get kind of this lead-in pattern, and then you get a double bottom. You break out, and then the ideal entry point is right where we're at. That is your ideal entry point. If you're a trader, they'll say put the stop loss something like here, somewhere at this support, where if it breaks down below that, you get stopped out. But this right here is a double bottom. It is a reversal pattern to go higher. And this is from Jeff Curry. He said this early 2022. And what he said is, let me blow this up so you guys, well, maybe not that much. He says, I've been doing this 30 years and I've never seen markets like this, Curry said in a Bloomberg TV interview. This is a molecule crisis. We're out of everything. I don't care if it's oil, gas, coal, copper, aluminum, you name it, we're out of it. And the charts are obviously signaling that we have a double bottom here. And I know things have gone down from 46 down to about a little under 30 for COPX. But that doesn't mean that the fundamentals have changed just because your price has changed. And it doesn't mean that we don't bounce around here for a little bit. Maybe we do just rip higher. But past bull markets, we've seen liquidity outpace supply. liquidity outpaced supply is the market condition. It's when they put more loans against new homes, and it expands the money supply at a faster rate than goods and services and GDP in the system. That's the inflationary, we'll call it inflationary push, and then supply lags and it has to catch up. So it's basically liquidity outpacing supply. But what I just read here is he's been doing this for 30 years. I've never seen markets like this. This is a molecule crisis. A molecule crisis means it's a supply-driven crisis. And I don't know if we've seen the extent of a crisis that crosses or bridges across so many different commodities all at once. Maybe we have, maybe we haven't. But those have always been liquidity-driven, where we could kind of expand into more production. Now, what happens if we have a molecule crisis and liquidity keeps coming into the system from fiscal spending and interest rates, and we'll call it Medicare, Medicaid, all these different things? We could see a highly inflationary environment. I've said that a lot before. But we could also see a gap in 2023 for a lot of materials. We're kind of in a transition spot for some of the materials between 2022 and 2024, which is 2023. So we've got, I'll kind of come down here. I think I put some on lithium. No, okay, yeah, I put lithium. This is supply-demand balance for lithium. And I look at all these. This is basically what drives markets and eats through your inventory levels. So when you look at this, we've got the double bottom. Just, you know, we usually see this. We break out, and then we do a return move back to the breakout, usually. That's pretty standard. And this is a very big fractal for this move, to move this much. We went from $20 all the way up to $90. Now, if we look at the supply-demand balance forecast, and I know that this here was a liquidity event through stimulus, but if we look at the molecule side, so to speak, supply-demand balance, the transition year is 2023, where we go from 2022 to a slight deficit in 2023 and then a bigger deficit as we go forward, as long as these projections are accurate. So really, we could see a pullback here in 2023, the first half. And if we come back down, that would be what I would consider to be a good buying point, at least for myself, not advice. So the deficits are out in front of us. The molecule shortage, quote, is out there. We're just going through a transition period between a liquidity stimulus event and the molecule shortage is coming ahead of us. And people are going to say, well, what should I do? Should I sell out? Should I do whatever? I'm just holding on, guys. I got in at some really good times, and I'm going to continue to average in to my favorite sectors and companies over time. We go down to copper. I think I put a couple of things in here for copper. So here's copper. This is the price of copper here going over. We've come on up and broken out of this wedge pattern or consolidation period to the upside, and we've pulled on back. Here's the visible copper stocks. This is inventory of copper over the years. And you can see this year here was 2018. 2019's the pink line. We keep drawing down. 2020, it came up a little bit, but we're drawing back down again in 2022, which is the green line, which is getting lower and lower. 2022, we are very low, given our 5-year outlook here. We're at 200 kilotons. So we're drawing down inventories, which is bullish. And we've been doing that ever since 2018. It's been game on, irrespective of liquidity and all that other stuff. Now, here's another one. This is more of the market balance that we're looking at. This is copper demand growth puts supply elasticity under stress in an accelerated energy transition scenario. And the primary demand you can see here coming up, and this is your AE2 demand. That's your scenario where we're trying to push our demand and get this thing through. And I think that's probably happening to some extent as our inventories are very low, which means that we are running a deficit. That the inventory here is telling us we're running deficits if this is going down. So The deficit is somewhat small, but could get very large in 2022, 2023, 2024. It could blow out the deficit. So for copper, we're going to hit a molecule shortage as well, which is going to push prices higher and higher and higher. So the transition year, 2023, if we get demand destruction for a little bit, it's possible. But we also have China reopening. It makes figuring this out very difficult because you've got America trying to destroy demand, at least through interest rates and all that. That's what they're trying to do. And I think that the inflation from the money printing and stimulus will naturally work its way out, irrespective of the interest rates. But it's going to work its way out, and we're going to get this gap potentially between now and when the deficits really hit. Could be a gap, may not be. We have China reopening, a lot of things going on in the background. But this is what that gap looks like going forward, and there could be some gaps coming up, especially mid-2020s. If I keep scrolling down, I go to nickel. Another one that has gone up, quite dramatically here. I think they're probably trying to slow this move down here in nickel, but nickel's got incredibly low inventory levels here. The blue line is your inventory level. Your total is this guy here. You can see this thing, they're all just dropping down and down and down in 2022 for inventory levels. Now, looking at this guy, this is your existing supply, high probability projects and stuff. It says, inventory overhang worked off by 2023, new supply needed. So we're going to go into a molecule crisis for nickel as well in 2023 sometime. So we're seeing a general theme here, 2022, 2023, 2024, for a lot of different materials is all stacking up for a potential commodity supply shortage or a squeeze, where it'll squeeze prices higher. If we look at aluminum, so we've got aluminum here. I think we have, yep, there's the charts there. And what we've got here is aluminum. We've got the double bottom, the breakout, and then we've got the retest, which is basically where aluminum, the ideal buy point for technical analysis would be basically where we are at today. This is Trifigura. Trifigura says global inventories will be exhausted by early 2024. 2023 is that transition period where we go from 2022 to 2023 to 2024. And we should be looking at these types of investments now. We've got the positive technical analysis forming. And there's your massive deficits that are coming up in 24, 25, 26. So aluminum has these deficits as well. And if we look, what they say is the deficit is now moving at such a speed that it's unsolvable, actually, he said. Unsolvable. So that has my interest peak as well, that we're running out of aluminum and that these deficits are kind of unsolvable. And I just wanted to kind of touch on all this because, it's happening across the whole board. It's not just happening in these metals that I'm showing you. The deficits are there and they're all coming. And we could see a large inflationary push from stimulus, a little small gap between some of these commodities of the stimulus money and then the molecule shortage. And that's where I talked about a disinflationary period between peak inflation. It could pull back to some level. I don't know what that level will be. And then this will have to kick in. I think that's what the overall markets are and what we should be expecting. I don't know if they're all exactly the same. So we could see things really take off in certain markets. Inventories are very low. Volatility is going to kick up. So when we look at all this, I think volatility is going to kick up. Inventories are going to drop. Things are going to get all kind of crazy and volatile. It's not going to be an easy ride. And it's going to happen in oil. It's going to happen in natural gas. It's happening in coal. It's happening across the whole board. And these things are going to hit at different times. So I'm taking an approach, diversify across, get my companies that I really like, get the companies that have infrastructure in place that are kicking out production, and I'm gonna play the move of the commodity. I'm not going to play the speculation on, they're going to hit this big mine or something. And I do have some money in it, but my main goal is to play the move of the commodity price. and play it in a way that I balance risk reward quite well. And if you guys are interested in doing that, definitely sign up for the finding-value.com Platinum membership. Use the word discount in the coupon code to get a discount. Bigger discount for a yearly membership. But that's what I've got for today, guys. Give me a thumb up for the content. Subscribe to the channel if you haven't already. That's what's coming. Prepare yourself for what's coming. And if you see market volatility, if you see short-term weakness, this is what I focus on. I focus on the fundamentals of what's coming. Now, there could be, some of these could have a small gap. It could be slow for 3 months, month, 2 months, 3 months, 4 months, 5 months, 6 months. We could consolidate for a while until the inventories get to critical levels. Volatility is going to kick up, and then it's game on. All right, guys, we'll catch you next time. This is Finding Value.